So there was nothing today. Obviously, tomorrow we're going to see some elections. Wednesday, we've got crude inventories, 30-year bonds. So we've got a lot going on. And Thursday, we've got FOMC. Now, lately, Dan and I have been talking a little bit of, we've been seeing some things kind of moving. So sometimes I'll come here and look at also what we have affecting us for the medium, which we did have a little bit today. So, that may have been something that got things moving. But you can definitely see a lot more going on when you look at the two bulls versus the three. Okay. And been noticing at times that we're seeing a lot of movement that we would normally look like news moving. So that's one of the reasons I started kind of checking this out. And we're going to talk about a few things that we check out these days that we weren't necessarily doing before. So let's talk just a little bit about the election. So I did get an email coming in today from NinjaTrader that said that the margins are going to double during this time of the elections. So if you would normally need $1,000 or $500 per contract in your account, now you're going to need $1,000 per contract in your account. So you want to be aware of those kind of things when it has that high volatility that we're going to, first off, the market's going to be moving a lot faster. There's going to be a lot going on. So first thing we see right here, we see a lot of weakness as the MACDs are just barely starting to break out of the band and lower than that last pivot. When the price pulls up, it starts making these reversal bars that are pushing towards the downside over the next few days, which to us looks like we're stuck and trapped in this area. All right. But what we're really looking at, when we're looking at the smaller charts, we're just kind of trapped in this area, seeing that. But if we are looking at our bigger charts, we can see that it's just kind of preparing for that movement. So these are some of the lessons that we have in things like signals of strength and signals of weakness and, looking at the bigger picture versus the smaller picture. Now, what we really want to see to get past to feel like we're going to really start seeing a lot of continuation to the downside would be getting past this area first and then this area next, because this was a really strong area. This was a good, strong area, but this was a nice, strong, deep pullback that got us back below the EMAs. So I'd really want to see getting back below here if we're going to expect it to stay in a downward trend in the overall. We have an area right below us, the EMAs here, that can push us to the upside. If it does go above the EMA, but the large EMA is still below the small, is that still considered an uptrend? It's not about considering it an uptrend. It's about considering the direction to change on that chart. So if it gets back above the EMA, both the EMAs, and back above the zero line, and not just above, we want to see it break away and the second bar that is not touched either of the EMAs and the MACDs be above the zero line. That is our direction up. The direction to the downside doesn't technically change till, I guess it pulls away here, but I'd probably not consider it until about right in here somewhere because it's back, because it's back below the zero line and back below the EMAs here. So I like to see it, both of them, and like not just barely creeping over. I want to see it kind of clear it. And it really gives me a lot of confidence if it clears it and pulls back to it in order to continue. Also, Chuck, I heard you talking the other day about being a little frustrated with the way the market is moving. And I think there's no better time to take the time to just sit back and watch it and learn some lessons. Um, we do not need to be in everything. There's a lot of trades throughout the day, and some of them are very limited, and we have to be okay with them being limited. We need to read the signs that the trades are over and to get out of them. We need to read the signs that the market's just junk that day and that we don't need to be a part of it. And sometimes those are hard, those signs are there. It's a matter of, do we listen to them? Do we choose to pay attention to them? And do we choose to step away during that time? Because we can all get wrapped up in that kind of thing of being frustrated because the trade didn't work out and keep trying to make trades work out when they're not even really there. Okay. So just things to think about. We all have that issue. Okay. Um, I do firmly believe, especially, with things like Dan coming here for a while, we spend a lot of time working with the market. And I feel like we both see improvements in ourselves just spending that time with each other, and spending more time with the market. So if you guys, and this is not directed at anyone in particular, because I know someone is going to think that it's directed at them. If you guys have trades that have not worked out, we need to see those. If you have trades that do work out, those are lovely to see. We're happy that you're making good decisions. But if they're not working out, those are things we need to see, because you can't, a lot of times you struggle to correct them on your own because you can't see what the other issues were, or you weren't paying attention to what those other issues were. And sometimes it's as simple as someone saying, just make sure you're paying attention to XYZ, and it can shift everything in the way that you see it. So just if you guys are trading, and there is so much value in us, like, kind of sucking up our pride, I guess you could say, and sending those things in so that we can help you to see better. And honestly, something that I always think of too is, if we can help you with that lesson, then we can help many others with that lesson, because there's other there are people that are going to see those same things. Something else Dan and I have been talking about a lot lately, which has been really great, because we've got a lot of new lessons we're going to have for you guys, that we want to go through and add to growth and development, that are going to be things like the 233 tends to give us what looks like an amazing trade in the direction that, right before it turns around and just goes completely opposite direction. So it's about paying attention to more or less what the bigger charts are saying, making sure you're paying attention to what the MACDs are saying. We're going to be doing a lesson over reversal bars. I do feel reversal bars are a lot more, they have a ton more of them these days than we did when we started these lessons. So it's about paying attention fully to the MACDs in order to pay attention to, it may give you a reversal bar, but did the MACD say it was going to continue? Go, Tim, go. Um, So, just some things that we're going to be talking about in the future. And if you guys have some lessons that you've been struggling with, some things, please reach out to us. We'd be happy to take a look into them, um, and just give us some, see if we can make some deeper insights on those kind of things. Yeah, a lot of our lessons do come from seeing our own struggles and seeing struggles of our students. Something I wanted to talk about is, Dan and I were sitting there, and something I'd kind of been mulling over in my brain is the Fibonacci numbers that we use for the MES. And you can actually see down here at the bottom, I do have the Fibonacci numbers that we've been using for the MES, on the ES. Because I wanted to see, with situations like this where it's getting a little bit harder to read at times, if we minimized the Fibonacci numbers but still kept that separation between them in the same way, how would it look and feel? And I've actually kind of enjoyed it. I do feel like it allows me to have a little bit lower risk, because guys know that I've moved mine up to anywhere between 2 and 2.5 points. If it is, it will always come out at 2 when I put it in, and I'll move it 2 ticks to 2.5 points. Except for on my 2 contracts, for some reason that one is set properly, so it has it at 2.5 points, and I have to move it down 2 ticks, or move it closer 2 ticks. I feel like it's allowed me, just kind of looking at it, allowed me to get back closer to that 1.25 points. Now, 144, admittedly, is very fast. 233 is already pretty fast for some people. 144 is going to have more bars. It's going to feel a lot faster, but we're not using this when the market is moving at a really great speed. I'm looking to use this as a possibility whenever the market is really slowed down, giving me a bunch of junk through here. Am I seeing a clearer picture through there? And in a sense, I do feel like I'm seeing a bit of a clearer picture looking through the smaller charts, just something that maybe I want to play with. Really, all I did, if you want to play with it, is I just right clicked here, I duplicated in a new tab. I went here to data series and I changed it to the numbers that I want. And then I changed the tab name so I wouldn't get confused. Dan has gone as far as to, how do I remove this? I don't know how, I'll figure it out later. Dana's gone as so far as to change the color of the EMAs so they don't get confused. And that's actually not a bad idea because when I opened this up, it was on the 987, but changing the color of these EMAs to not get confused. So it does feel like your risk may have been in a little bit of a risky spot when you got in. I will say that, you know, over the years, I would have used to like, kind of come down on hard on that. But to me, if you are getting in a little late, what it is about that after that is risk management. You've got to manage your risk kind of closely instead of keeping it out here in an area that can be hit easily. So I would have quickly, once it moved down here, been back here, back here, back here. And I think that that target of the next EMA was great because when we come back here and see what's happened, we had very, very weak movement in here. We've got a nice long bar trying to push back up. I would have really expected these MACDs to pull over just a little bit more and pop up off of there. I'm still not 100% convinced that this is going to try to make long moves just yet. Maybe seeing something like a pullback rollover and continue down. But these are, if we're looking at the smaller charts, oh, hold on, let me go back to this one. If we're looking at the smaller charts, this has created a move to the upside. Man, it is windy out there. If we're looking at the bigger charts, we're still trying to kind of finish that move to the downside. So we can see here, pulling back, coming down, pulling back. So we're still making lower lows, lower highs at that point. But we see the reaction of the MACD here has not been much. That happened right back in here. Still didn't keep the market to the upside, but we also realized that the moves to the downside had a limit at that point. I don't necessarily trust those flags that go up into the EMAs like that. Because a lot of times I want to see it, that next bar needs to move up like pretty significantly with it. Otherwise, I'm kind of anticipating something a little along the lines of what happened here again, where it just pushes up, but it can't get back above here because we could see it happened right back in here earlier. It pushed up, it came back down, made a nice, not quite like this, obviously, not a big tail on it, but it happened right in here also, right back into the EMAs. So I want it to prove it to me at this point. Now, one of the things that I do like about this is that it did not get into the Bollinger Bands here. The previous times we can see it got into the Bollinger Bands. So I don't know if I trust that flag to the upside, to be very honest with you. So it's pointing up and that the closes are up here. We're still, that's not strength at the top of the band. Could it break through? It looks like it's trying to, but I think the EMAs and the zero line might win out. What I'd love is for it to pull back to this band and push up. But these Bollinger Bands, which is something I've been kind of paying attention to a little bit more lately. A lot of times when they're like this, it's typically pretty easy to break through them. But I don't know if that has the same effect on the 28,657. Yeah, kind of like here. Here it did not. We've been kind of watching that a little bit more when it gives that guppy belly look. I don't know that those EMAs look so strong down on the 28,657. To me, it'd just be insane to trade directly into them. So let me move this 28,657 out of the way. Let's talk about a little bit what's happening in the immediate. This is giving us the look like it's trying to push down. It has made these highs. It's pushing down here. It's rolling over. If I was getting into this, I would definitely be a little concerned if when it gets down towards this next EMA. I would be covering. And if it pulls up and stops me out, I wouldn't feel bad about it, although it would probably go down. I have had that issue a little bit with the markets running like this, and that's why we've been talking a lot about how we can stay confident and not minimize that risk as much as quickly. But it really comes down to looking at the bigger charts, honestly. It did give me a decent reason with it rolling here. Didn't cross the bottom band. It does pull back a little bit higher. I did have my risk right above here. I'd actually considered pulling my risk in 2 ticks behind here, but I didn't right away. Right there. I did see some white BBs down here, but they were still outside. What really told me it was okay and go time was right in here. It pulled back. Thank goodness I had my risk where it did pull back just a little bit higher. And then I started to lock in my risk here and here. It touched here very quickly. And so this is where I was talking about it was a little harder for me to hold my wrist because what I wanted to do was move it down here and down here. But I knew it wasn't the right thing to do. I think I did have it just right above this EMA at this point, and then let it run. We were moving because Dan was in here with me at this time, just kind of pulling it back behind here. And he heard me struggling because I wanted to go down further. I was like, but it's not right just yet. We still have strength down because by
Um,
this time what's that?
I remember seeing it. It was at the time it was like plus 9.75, and I was gonna say
Yeah.
something, and I was like, I'm just gonna keep my mouth shut and let you do your thing.
Oh, because of the price
Because
where it was
I
at.
myself, I was thinking I would probably be squeezing in the risk, but I was like, I'm not saying anything.
Yeah. So this right here too, yeah, because there was about 5, 7 point difference between where my target right here. It was like
Hmm.
pretty big, and I needed to move it down. I was like, man, I just need to wait. So it did start pulling back here, but it was so weak pulling back here. I was actually seeing if we would cross this bottom Bollinger Band and continue down. But when this didn't happen and then it started pulling up like this, I believe I closed it out 1 tick before it hit my stop. Currently, I am only trading 2 contracts, in case you guys are wondering. A lot of it's been there's actually quite a few reasons. Number one, I have not been trading as much, and I'd taken some time away, so I have to rebuild and regain my confidence as well. And that I can see it, but I have to regain that confidence in pulling the trigger when I see it. And so it is something that, like they say, like riding a bike. But yeah, if I haven't ridden a bike in 20 years, there's a good chance I might fall off once or twice. So I decided to just minimize my target or my contracts down to 2, and just kind of build that muscle memory back up. Also, in reality, I've never really traded sitting right in front of somebody. So that does add a sense of pressure to it of having to perform for those people you're trading right in front of. So it has been a goal for me to be trading in front of like Dan and things like that. And um so that way that we can all build better too and everybody else gains that confidence just the same as the rest of us. Because there's nothing superhuman about any of us that are making these trades like this. It's just sucking up that embarrassment and that pride and saying it's worth, putting this out here because I know I'm not the only one. So, yeah, and it'll annoy. Okay, so here's another really, really good instance of it giving what looks like great reversal bars, and it really like sucks you in at the last moment on the 233. It's like, oh, look at these pullback EMAs are opening. We're not breaking that top Bollinger Band. And then you get in short right here, and bam, it turns around and either stops you out and goes, or just goes around to the upside. So that's why I like to see a little bit more clarity. These are not very strong to me at all, which tells me we have weakness to the downside. We haven't broken through this bottom band yet. So probably I would be happy to take something again like this. If it was going to do something like that and I missed the entry, wait for some of these pullbacks to the 233 EMAs and take it with a continuation of the strength to the downside in the 10946, strength to the downside in the bigger charts. So, that's kind of what I'm looking for if I want to believe in these moves and continue with them. When we're going, well, no, just like when we see going above and below the areas using the highs and the lows over using the areas of the EMAs
Hmm.
as areas to take the trades
Yeah.
because you can no longer trust those EMAs when we're going above and below them. And I was brought up to be religious about EMAs and taking trades from them from the first two companies I worked at. It was like, you touch the EMAs, you take that trade no matter what. And something like this touching the EMAs or this touching the EMAs going to get you run over. And that's honest to God when I started becoming more involved and more interested in the MACDs. Because it was like, what can I help myself and others to learn that when we touch those EMAs, it's not time to take the trade yet. And it was really getting deeper involved in the MACDs that did that for me.